This is your Monex Metals Market Update with Mike Maroney.
Good afternoon. My name is Mike Maroney. It is Thursday, November 9th, and I am coming to you today from the Monex Precious Metals Studio. Let's talk precious metals. We've had a very volatile week as the Saudi Arabian situation over the weekend caused a lot of volatility in the precious metals. On Monday, we saw both gold and silver test multi-week highs, and then on Tuesday, they gave back most of their gains as the market pulled back on profit taking. There's a lot of volatility being built into the marketplace as investors are wondering if this tax cut situation doesn't actually materialize, what will that do to the potential value of the U.S. stock market? And will we start to see a corrective move in a 40-year bull market as far as the bond market is concerned? First, let's talk a little bit about stocks. It was interesting because Warren Buffett came out and talked a little bit about his standard stock valuation system, which is basically built on a stock market percentage in comparison to overall GDP. His theory is when the stock market is worth 80% of GDP, it's undervalued and potentially going higher. Once it gets to approximately 100% of GDP, he starts to worry a little bit about long-term valuations. But interestingly enough, what we're looking at right now, the U.S. stock market is currently valued at 139% of GDP. So it is priced for absolute perfection, and it is also priced for inevitably a corporate tax cut down to somewhere between 15 to 20%, which would add additional earnings to the overall situation. Now, what does that mean to you, the individual investor? Interest rates are basically trading at historic lows. The Federal Reserve has been talking about quantitatively tightening, and what that means is their balance sheet currently sits at $4.5 trillion. What it means is they will start to actually sell off the bond positions and the mortgage-backed securities. And what that may do is it may actually create a situation where money that is being used for other investments will suddenly be needed to offset the demand as far as these bonds and mortgage-backed securities are concerned. And if that's the case, money has to come from somewhere. And usually what happens, money has a tendency to flow from overvalued to undervalued. So let's look at the full spectrum as far as the investment options are concerned. Stock market, only 6% away from the highest percentage to GDP valuation. And what do I mean by that? We are currently priced at 139% of GDP. Now, one time in history we had a higher valuation, and that was right before the tech bubble crash. And then that's when the valuation of the U.S. stock market actually hit 145%. Now, the interesting thing about corrective moves in the stock market, stocks can move higher, higher, higher based on perception. And what changes perception? It can be a small event, it could be a large event, it could be the potential for a black swan, or it can be a sudden change in the overall attitude of investors around the world. But one thing is for certain, where we sit today is abnormally high in comparison to historic value. So it wouldn't be unusual for people to start to take profits and look for an alternative place to park capital. And based on the current situation that exists in precious metals, with gold trading at $1,280, almost $700 below its all-time high, and silver trading at $16.97, and that's basically $33 away from its all-time highs. These two specific investments may draw a lot of capital if we start to see a corrective move in the stock market. Now, if you look back over the last 4 or 5 years, seasonally speaking, it's not unusual to see a strong value buying situation develop in both gold and silver sometime in December. Even though most investors believe you want to be positioned in precious metals for the first quarter of each new year. If you go back to 2015 and 2016, both times the markets bottomed in December and inevitably had major moves. As we head into 2018, there's a lot of volatility geopolitically around the world. We have the situation in North Korea. We have the situation in the Middle East. We obviously have concerns as far as the overall relationship between Russia and the United States. And we have a very volatile political situation here in the United States, as this country has seemed to be split down the middle, and many people believe that has become very polarized. So now, what does this mean? It means we have a lot of uncertainty. And in times of uncertainty, having a certain percentage of precious metals in your portfolio has proven to be a quality diversification tool. There's a theory called modern portfolio theory, and it states that you want to maintain a position in non-correlated assets in high-risk periods. And right now, based on the valuations, many people would have to say that this is one of two of the highest risk periods that we've seen in history. So now could be one of the best times to talk to somebody about how precious metals could add the potential for profit and also put you in a position to hedge against some sort of event that could cause major volatility throughout the world. Are interest rates headed higher? Of course they are. They're at all-time lows and they can't go much lower. If interest rates go higher, bonds will inevitably lose value because they track in an inverse relationship to the overall interest rate. If interest rates go higher, stocks could easily pull back based on the fact that if you look at the historic norm, that's typically the playbook that many of the professional investors will utilize. But if you go back to 1971, 1972, when we began a period of inflation throughout the world, precious metals outperformed all other asset classes. And if you look at the overall inflation rate that's starting to build up in the 4 largest economies in the world, China, Europe, Japan, and the United States, now may be one of the greatest times to take a physical position in precious metals. Obviously, if you've never owned gold or silver, it would be a wonderful thing to have a small position, hold it in your hand, and know why investors for thousands of years have utilized this as a way to store wealth. It makes a lot of sense right now, and the best thing to do is give us a call so we can explain how precious metals could fit into your portfolio and maybe give you just a little bit more peace of mind in these uncertain times. Thank you.